Get out now! I'm your host, Steve Van Metre, and thanks for joining me today. In our show today, they're dumping stocks. I'm going to show you why the experts are selling ahead of the election. We're going to talk about what they're selling, the reason behind it, and where they're putting their money, and perhaps why you should be selling too, because this is our Sunday show, the show that makes you money, which is why we like to look at the technicals, momentum, and machine positioning each and every Sunday to help you make more money in the markets. And speaking of making more money, we'd like to welcome our sponsor for today's show, Trillion Energy International. You can find them on the CSE under the symbol TCF and on the OTCQB under symbol TRLEF. And they supply natural gas and oil to Turkey and Europe. And one analyst, Research Capital, has a speculative buy on Trillion Energy, as they note, due to the geopolitical issues and why the energy market is different in Europe, could send their stock soaring. Stay tuned to the end of the show or check out the pinned comment or description for more information. Now let's head over to Bloomberg, where we see one of the world's richest people, Warren Buffett, the head of Berkshire Hathaway. We note that their cash pile is reaching a record of $325.2 billion, and he's continued to cut his Apple holdings, slashing the stake by a whopping 25%. And this goes against everything we've been hearing in the media as investors pile into stocks, and not just any stocks. They're jumping into the Magnificent Seven. Now, you go back to, of course, 8 years ago, what followed when former President Trump took the White House at the time. Well, we saw small cap surge, we saw interest rates rise, and that's the same setup here, except the difference this time, investors are cramming into 7 stocks. Let's talk about what else Warren is selling, and with the exception of Bank of America, where Buffett is the single largest shareholder, which we already knew was aggressively being sold. And in Q3, Buffett confirmed he took down his Bank of America holdings by 23%. So what's the biggest difference when we go back 8 years ago when we saw former President Trump take the White House? We were in the early stages of an expansion. And in that case, you want consumer goods companies like Apple, you want to own banks like Bank of America. But if you're headed into recession and you believe we're in the early stages of it, well, Apple tends to sell less products during a recession, and banks face an issue with lower lending and higher delinquencies. So you start to see Warren's move here, but he's holding cash. And this, again, goes against what we're seeing in the market as retail investors, institutional investors are all in. They're dumping cash to buy stocks, and in a huge way. But the company has struggled to find ways to deploy its cash pile, as Buffett has found market prices too high to find attractive deals. So what he's saying here, wait a minute, maybe this market's overvalued. But yet, what is the prevailing belief here is that we're going to have a complete Republican sweep of the White House and Congress, and this is going to send stocks on a long-term tear, one of the biggest bull markets in history, and investors are loading up big. But what if that's the rumor of what happens? Perhaps you think about the markets. Remember, it's buy the rumor, sell the news. Could be a big shock for investors on Tuesday, no matter who takes the White House. And Buffett said at his annual meeting that Berkshire wasn't in a rush to spend, quote, unless we think we're doing something that has very little risk and can make us a lot of money. If you're looking for opportunities in this market, we're going to show you where some of those are. Stay tuned for that, because in the meantime, higher yields on cash holdings have set the bar a little bit higher for other opportunities, as Warren suggests that perhaps the risk in the market is too high and the opportunity in cash is even better, because it gives him an opportunity to deploy on any downturn moves. This is something, again, you should take into consideration. He's not selling everything, but he's dumping some large positions here to set up to be a buyer, because Buffett believes the market is overvalued, so much so that in the third quarter, Berkshire refused to purchase any of its own shares, making this the first time it has done that since the company changed its buyback policy back in 2018. So he believes his own stock is overvalued. But yet we get a completely different perspective now from Goldman, who's saying that this is a huge buying opportunity. Well, at least based on historicals, when we look at the flow of funds reports, what Goldman suggests is today, going back to late last week, starts the best trading period of Q4 for U.S. equities, with the data going back to 1928. In fact, October 28th is one of the best trading days of the year and a positive seasonal trading stretch with 9 straight days of gains. Of course, the last 2 days, Thursday and Friday, we didn't see that at all in the markets. We saw liquidity issues on Thursday. We saw the markets try to rebound on Friday. And yet, what are we facing here is a completely stretched market. Now, what Goldman's suggesting is seasonals are going to take advantage here, and we could see a big rally. But again, we come back to what Warren Buffett is suggesting. Why would he be raising cash here? It's because he sees we're in the early signs of a recession. Now, when we look at machine positioning, Goldman notes there could be some light selling over the next week, but net buying over the next month, unless there is a big down move, and that would take down 180 billion of global equities. But let's turn to Bank of America, who gives us a little bit different picture on machine positioning, and they say heading into the U.S. election, CTAs are long equities, which we've noted, short bonds, long the dollar, and long gold. So you talk about kind of seeing a buy the rumor, sell the news event. We see investors are extremely overpositioned in certain asset classes, believing on a specific outcome for the election and the economy. And think about this, there isn't one man or one woman that in a mere overnight election can change the course of the U.S. economy. We're far too big for that. You think about it, if you change the captain of the ship, it doesn't turn around immediately, and that's the case here. We see trend followers are looking to be sellers of U.S. equities. According to Bank of America's model, trend following positioning remains elevated in U.S. equities, along with the fact that retail and institutional investors are long as well. When we look at Treasury futures, they see the shorts continuing to grow as U.S. 10-year yields rose for the 6th straight week in the last 7, and our model continues to show growing short U.S. Treasury futures positioning across the curve. So we could see here is another move down in bonds and then a surge higher as all these short positions get built up. We do note historically interest rates tend to fall following presidential elections, not rise. And CTAs are buying into U.S. dollar into election and the FOMC meeting on the 7th, selling oil and copper, and again setting up opportunities in the commodity market. But let's take a look at our screens to see where we see risks in the market and opportunities. As we start with the S&P 500, as we do every week, broad momentum is negative. Now, how do we know that? We look at the relative strength indicator, and momentum is negative when it's under 40. It's been trending down at 45. The MACD's got a negative cross, and that's your moving average convergence divergence. But how do we know momentum is negative? Well, we look at our own momentum timer pro report, where we take in technical signals like the RSI and the MACD and other signals, aggregate them together, and run a proprietary overlay. We see 2 sell signals on our daily count, but we do know on a 1-month, 3-month, and 6-month window, momentum is maxed out to the long side. That is very rare. That tells you the market is stretched. You'll note we don't have a position on this. We're waiting for a pullback to look to even take a position. Upside target is the recent all-time high. Downside target 557.76. Let's take a look at the S&P 500 here, because you look at this big stretch in the market of just never-ending rally. And what Warren Buffett is warning about is that perhaps this market is too long on one side of the trade. We see, of course, a slowing economy likely to lead to the market coming down and some opportunities opening up. And what do we see on the RSI? We see momentum slowing. We see it as well on the MACD. Right now, the 50-day moving average is acting as support. We put our downside target right here, right around the 100. You see there's a little bit of volume supporting that. The larger volume moved right down here at 543. You get a pull back here. This is where it'd be interesting to see if there's an opportunity to rebuy. But let's take a look at the QQQs here, because tech stocks are massive buyers of their stock, and usually about 1 to 2 days after earnings announcements, well, they come back and buy. But what do we see here? The same story. Momentum is negative. The RSI and the MACD both slowing down. 2 consecutive daily sell signals on our momentum time pro report. But how about this maxed out momentum? But we talk about machine positioning. We model that too on a fast algorithm. This is very similar to what Nomura runs, and on slower algorithms like Bank of America and Goldman. What do we see here? Machine positioning on our signals starting to back off, and that's exactly what Bank of America was warning about. Is hey, wait a minute, we could see some net selling here. That's what we see in our models. If you want to trade momentum or machine positioning and win, check out the links in the description below. We give you a free 30-day free trial, and you can check out all of our signals and follow along even with my trades. And while you're there, check out Trillion Soybean Energy International. You can find them on the CSE under symbol TCF and on the OTC QB under symbol TRLEF. Let's take a look here because, again, we have no position here. We're looking for some sort of a pullback on the fact that everybody's all in this market. Upside target, recent highs at 503. Downside target, 478.12. Let's take a look at where we see perhaps tech stocks going here, because they've got to really kind of rise back up here to even give us a shot. But the fact that we've seen selling here, on the note that we had companies come out of their blackout window and look to repurchase shares again, tells us our downside move is going to be the 100-day moving average in blue, and from there down to 543.38. Again, that's where most of volume has been traded over the last 6 months. That is the big level of support. The question is, following the election, what's going to happen to the markets? I'd love to know what you think. Do you think this is a generational buying opportunity? Who do you think is going to win if that's the case? Or do you think this is a sell now and look for another entry point? Well, again, weigh in the comments below. Love to get your opinion on that. Let's take a look at the Russell 2000 here, because what we see, small caps, where they took off under former President Trump's first term. We're not seeing the market as enthusiastic about this. Of course, that means the economy is indeed slowing. You see here momentum, 2 consecutive daily sell signals. We've got no position. We've made money on small caps before, but look at this machine positioning now starting to back off here. And that's a risk, because if we see any further downside moves in the market, the machines are likely to sell here. Let's take a look at IWM. And how about this? See that red bar? That's a 6-month volume profile. That's where most shares have been traded over the last 6 months. It's a sign of resistance because price cannot get above it. That's not something you'd expect given a market that is very bulled up about the economy at a time when the economy is slowing. What this tells us is small caps are pricing in a slowing economy. We've got our price targets down here right around the 100-day moving average. From there, you've got an air pocket all the way down to the 200-day. And again, momentum slowing across the board. Let's talk about where opportunities are at, and that could be the bond market. Let's look at Metre here. They're noting in their machine positioning, they got to be over 113.65 to buy the 10-year. Friday's close at 110, so no support in the short term. The risk, though, is to the downside under 109.88, and they're net more selling on that, looking to move into short positions. But how about Goldman? They give you a different picture here, as their CTA exposure in global fixed income has substantially improved. They note that sales estimate CTA sold 109 billion worth of bonds over last week, 309 billion over the last month. So they've been big sellers here, and now they're back to neutral levels. They estimate 23 billion worth of bonds to buy over the next 1 month in a flat tape, and they are better to buy in an up tape versus better to sell in a down tape. This is a new scenario suggesting opportunities could be in the bond market of all places. Let's take a look at TLT here. Now, you know we have a position on this. This is something we have not used stop losses on, and we warn our subscribers you should use stop losses. But if you don't, just follow our research and dollar cost average in, because we're going to be setting up another potential buy in here. I'll show you why. Look at this. Momentum's negative. The RSI deep in oversold territory. MACD also same scenario, deep oversold. 31 consecutive daily sell signals on our Momentum Timer Pro report with a sell max on the 1-month window. Now, we've done a full back test on Momentum Timer Pro. It's coming out to the report in a matter of weeks, but we look at the data. When we see a flip of momentum off of one big sell max signal, there's usually a big opportunity to buy. If you're looking to make money in the bond market, jump on those 30-day free trials. If you're a subscriber, be watching for that, because right now we see the upside target at 93.89. adding the downside target at 89.79. How about this? Machine positioning max short. So we're going to see opportunities no matter which report you're in. Or if you're in both, there's going to be huge opportunity coming at some point in the bond market. Let's take a look at TLT because it broke through that 6-month volume profile on Friday. Sellers came in aggressively. Again, this is the Trump trade. Long stocks, short bonds. You see markets really playing into that. We know that depending on who you're looking at, whether it's Bank of America, they say, look, this is going to get worse. That's why we suggested it could fall down here around 89.79. Goldman saying, wait a minute, any type of reversal here, and we're going to see some buying of this max oversold position. So definitely opportunity here. Let's zoom out to the 2-year chart. Again, you see people net selling. You'll notice there's that dotted purple line. Let's zoom in. This is the trend. You see it broke that upward trend. Again, everybody coming in selling bonds could be the wrong move depending on who takes the office on Tuesday. We'll find out that night. Let's talk about gold here because everybody's long gold. They think, of course, the United States is going to debase its currency. Momentum is positive. The story really isn't in gold. You look at machine positioning long, as Bank of America noted. Momentum as long as our reports have noted as well. The opportunity could be in gold miners. Now, we made some money on that. We've been talking about GDXJ and how we made money on that position. When we're looking for another potential entry here, we see 2 consecutive daily sell signals on Momentum Timer Pro. We see machine positioning starting to back off those extreme long positions. We see the upside target, that's now at 44.22. Downside target, 38.12. Let's take a look at GDX and why we would be looking for another position here. We want to see this thing come down to likely around the 100-day moving average, but you'll note it's made this kind of stair-step move higher. Now, there could be a bigger pullback coming here. If that's the case, miners are going to tell you where the metal is going. But if the miners sell off and gold actually goes higher, that's going to be a really interesting technical setup to get back in on the miners. There is a definitely more upside move in that as we see momentum trending to the downside here. So we'll be watching that. Of course, our subscribers will get any advance note on that. But let's talk about the energy markets, because while Trillion Energy International is focused on the European market, where geopolitical and demand is much different here in America, we look at momentum now on West Texas Intermediate. This is negative. RSI 48 and slowing, headed toward oversold territory. MACD on its way down. We have 5 consecutive daily sell signals on this. Let's take a look at U.S. oil, where we think it could get down to 67, 68 here, and that could create some opportunity. Again, you'll note it comes down in price and tries to rally up, comes down and takes higher. But what's right here is this is that 6-month volume profile. So every time it gets anywhere near here, sellers are coming in. You see that on Friday as well. That's why we're saying price on this is likely to go down. We're putting our target right here around 67, 68. You see there's a lot of support there. You see momentum slowing. So from a technical perspective, it's sitting right at its 1-year volume profile. Breaks through that to the downside. That's going to create a potential buying opportunity. Again, in the commodity space, our subscribers will be watching for that. How about another big opportunity? One we see in soybeans. We've got 19 consecutive daily sell signals. Our current position on this is down 2%, but look at this chart, because we see a big turnaround in soybeans coming here. And what do you note? That you've got a bottom, a second bottom, a potential third bottom. This price move could take off. Again, if you want to find where to put your money in other places in this market, you've got to be a subscriber. Check out those links below. And while you're at, check out our sponsor of today's show, Trillion Energy, who you can find on the CSE under symbols TCF and on the OTC QB under symbol TRLEF. And their mission: supply natural gas and oil to Europe and Turkey. And everything you need to know in the pinned comment and description below. And they are focused on European gas production with their SASB gas field. They have a 49% interest of that. That's in the Black Sea at Turkey. And they've got a development program targeting 17 plus production wells. In 2023, they've got 5 wells drilled. In 2024, they've got 4 plus workovers. And they're targeting a big production increase by the end of 2024. And they're focused on exploration in southeast Turkey. They've raised 55 million in equity with 15 million subordinated debt financing. They've successfully drilled 5 long-reach natural gas production wells in the Black Sea using novel technology. They saw a production increase of 300% from 2022 to 2023, and they've successfully completed their SASB preparation program in July of 2024. And there are strong prices and demand for natural gas and oil in Turkey. 98% imported natural gas, 92% imported oil. And this is a huge opportunity for Trillion Energy and their Black Sea natural gas fields, which is a key strategic area to regional energy future. And when we look at their net reserve summary and net present value, we see strong reserves growth in the years to come, setting up, of course, big opportunities for Trillion Energy International stock. They've got 10 wells program targeting discovery of 10,000 to 100,000 barrels per day oil field in discovery. And this is something that Research Capital has notated in their analyst report. They've given Trillion Energy International a speculative buy signal because they said if they can execute on all their plans they've got for 2024, this could be a huge catalyst for their stock. You're seeing that set up now. As let's take a look at some of their recent press releases. As Trillion Energy reports record production of 1 million gross production revenue for August, that was huge. And they announced a well in their SASB gas field has now been put in production. And they've initiated their Velocity String program, which is going to further increase the production of their wells. And you can find Trillion Energy on the CSE under symbol TCF and on the OTCQB under symbol TRLEF. And as always, with any company we feature on our show, you're under no obligation to purchase their stock. Be sure to do research before placing any trades. And with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.